Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I've got 6 stocks that are being called strong buys, even in this upward market. These stocks are floating at the top of the board in TipRanks by Analyst projections. So I thought we'd just take a peek at them. I'll let you know what I think about these strong buy stocks, and maybe you'll get some new ideas to research on your own. As always, my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research when investing. And if you like stock market analysis like this and other personal finance videos, please like this video, subscribe to the channel, all the things. Thank you to everyone who's supported the channel so far. All right, as I mentioned in the intro, I grabbed all these names off of the TipRanks stock screener. This is a pretty cool tool. I am a member of TipRanks. If you're new to the channel, my affiliate link is in the description if you want to learn more about the platform. And at least for me right now, in this kind of roller coaster environment that we're in, with stocks having big highs and big lows seemingly every other week, it's really easy to overlook stocks because you're looking at yours all the time, particularly in a volatile environment like we're in now. So I just added a few filters to the stock screener in TipRanks, and we'll pick off a few of the names and look at them more. In case you're curious, I did market cap. I did eliminate the small and micro cap companies, not because you can't find deals there, but in my opinion, with the market running hot, we do want to protect to the downside a little bit and look for profitable companies that are likely to weather anything that comes at them. So that was market cap. On the sectors, I did eliminate healthcare, utilities, basic materials, and industrial goods. So this is just a personal preference of mine. I'm sticking with technology, services, consumer goods, and financial. Healthcare in particular is something that I don't invest in very often. And if I was going to, it would probably be like a J&J. I'm just not smart enough to understand, drug approvals and all those things that a lot of people chase in the stock market. So I stay clear of healthcare outside of companies that would be represented in my, retirement account through an ETF like QQQ or something like that. Pretty much the same goes for utilities and basic materials and industrial goods. These are just not markets that I study. The stocks are structured usually differently, particularly in utilities where you've got high dividend stocks and so forth. So I'm just sticking to what I know here. And then finally, we like to make sure that we're looking only at the strong buys, which I'm doing here thanks to TipRanks. Their software goes through the analysis of how many buy and sell ratings are out there, and so they just stack it up for you, which is nice. And then on the best analysis price target, I want to see price targets that are at least a 10% upside because we're trying to find some upside, right, in a market that is running hot. At least today. It could flip and be a down market tomorrow. But for now, I just want to focus on stocks that if I invested in as a new investor, they have some bright upside at least over the next year or so. All right, so I put all those things in, and here is the list that popped up, and we're not going to cover everything here. I'm going to stick with some stocks that I'm familiar with. But the first one on the board, when you sort by the TipRanks Smart Score, which is basically their quant analysis secret formula, so to speak, of how they look at the growth potential and the fundamentals of a company. And I'm sorting by Smart Score today because it gives us an opportunity to really clean up some of the more speculative names and at least rely on some quant metrics as far as, how safe and reliable is a company. And then we'll dig into, is it a strong buy? What is the upside target? And here where my mouse is, we can see the first one on the board here. LiveRamp is one that checks all the boxes. You have a strong buy, 6 buys and 1 hold, and you have a price target upside of 59%. All right, so TipRanks is excited about LiveRamp. Now we're going to peek at this one on Yahoo, and I'm just going to share with you what I see, right? I haven't done a ton of analysis on any of these stocks we're going to talk about today, and we're just going to kind of whip through them. But right off the bat, when I look at the LiveRamp chart, I get a little bit intrigued because I see this dip here. I see that the price was in this kind of 82 range, and then you dipped all the way to 51. I'm guessing on a poor earnings report. So I personally like to buy stocks on the dip. So for me, that is definitely interesting. Then I look at the EPS. You've got minus 93 cents. So negative earnings, but when you look over here at this little earnings graph, it looks like things are headed up in the right direction, and they haven't missed any of their estimates since Q1 of 2020. So let's take a look at what's going on from an EPS revenue view, and we just hit this analysis tab, and you can get a lot of insight right here just on the current year. Year ago, EPS for LiveRamp was minus 55 cents. The average estimate for this year is 21 cents. So that gives you what? A 45 cents plus 21. That's a 66-cent turnaround in just 1 year. And are they still going to grow in 22? It looks like it, to the tune of about 12 cents or so more. So those are encouraging signs. Then we look at the revenue estimate. A year ago, 380 up to 440 this year and 507 next year. That's consecutive years of 15% growth, so there might be something here. So I like what I see from a growth standpoint and kind of turning the train around. For LiveRamp in particular, one of the things that is still concerning to me, if you take an EPS of 32 cents, you roll it into today's price of 56, my calculator says that that's about 175 on the PE range. So I'm not sure like how discounted this stock really is. So just my opinion, looking over the next year or two for LiveRamp, I like that it's beaten down and it has the potential maybe to get back to where it was. But if we're going to take the 2022 earnings, that's a forward PE of 175, 2 years forward PE. That's just a little too high for me when we're talking about essentially a rebound play, right? I'd like to see more value on a rebound play than what LiveRamp is offering. However, of course, that's just my opinion, and we will see what happens in the future. All right, going back to TipRanks, I'm going to skip ADC, which is Agree Realty. That's a REIT, and we're just not going to cover REITs today. AVGO, Broadcom, this is a chip stock. Price at $450, smart score of 10. You got strong buy, 21 buys, 3 holds, about a 13% upside to 516. Let's take a look at Yahoo and see what the metrics tell us. All right, Broadcom, 1-year chart, pretty slow and steady progress. It does look like you had a dip here, though, recently, where the stock price came down, I don't know, about $70, $60 or so. But overall, looks like a strong performer. We scroll down. You got an EPS of 865, which gives you a P ratio today of 52. Glancing off to the side, yeah, it looks like they've hit all their earnings estimates and actually exceeded them all. Clicking on the analysis tab, let's see what we got. Year ago EPS of 22, current year of 26, bordering on 27, and next year they could add a couple dollars to that too. Next year, EPS projections are almost always conservative, particularly in a month like March. And typically, for good companies, they go up over time. So I'm just going to assume they hit the 29 here. So the big EPS growth comes from last year into this year. Looks like getting, plus $5 on the EPS. Maybe it slows a little bit next year. Let's check out the revenue. Year ago sales, 24 billion. This year they're going to add a couple billion to that number, and then next year they'll add a couple more. So this year is plus 12% projected. Next year slows down a little bit at 4.8% projected. So that to me is just a minor red flag, I guess I would say. I do like to get double-digit revenue growth out of companies that I invest in. So that would require some more research on my end. If we take the forward PE, if we do the projected current year 2684, roll it into today's price of 455.93, that would give you a PE of 17. That might sound very low for a lot of people, but chip stocks normally ran at that pace prior to what we've seen in this blow up over the past year or so. So bottom line on Broadcom, I could see this one gaining over 10% share price this year for sure. I think things look like they're going to slow down a little bit next year. But the other wind in the sails of Broadcom is the fact that we've got this huge chip shortage, right? So you'd have to dig in and research more to figure out how much of that can they capitalize on. But overall, chips in general, I think are in a really good place, certainly for the next 12 months, likely much, much longer. And I should have pointed out with Broadcom right from the start, you've got a 3.29% dividend on today's price. So total stock return on this one could be a great, safe investment for the future. All right, back at TipRanks, I'm going to skip over CVS. It's just coming in as a moderate buy. We're going to focus on strong buys today, and that is EPAM Systems is the next in line. 362 on today's price, smart score of 10, and you got about a 20% upside per the analysts in TipRanks. All right, so EPAM Systems, this is a one-year chart. Just to be fair, EPAM Systems was not a stock I was familiar with off the top of my head. I did a little bit of research, and they're a software developer. Look like they focus pretty heavy on cybersecurity, on just scanning their website. And honestly, I'm glad I discovered this one through research. It's just another company to get to learn about and recognize if they're ever on TV or if they pop up on a stock alert or something. I'm glad I know more about them now. One-year chart looks great, heading in the right direction throughout the year. Scrolling down a little bit, you got a $5 EPS on today's price. That gives you a P ratio of 65. Looking off to the side, we are hitting our revenue estimates seemingly every quarter. Then on the projections front, EPS last year, 634. Average estimate this year, 742. So they're adding about $1, maybe more. Then it looks like they could add almost $2 to the bottom line here in 2022. So that is something to keep in mind. And if you think about this 742, I believe on the other screen, yeah, we were at 560 here today. So this 742 is actually a plus $2 add. And if you take that 742 and use it to divide the price, you get a forward PE of 48 just for 2021. Then you're adding another $2 of EPS on top of it. From a revenue standpoint, last year you had $2.6 billion. This year's looking like 3.2. And then next year could potentially bump up to over $4 billion. So that's a nice growth path. You see we would have 23.8% this year and potentially next year too at 22.4%. Bottom line for me on EPAM, this is one that I'm going to add to my watch list. Particularly if I see a big dip in the market somewhere. I don't know enough about the company yet to feel good about buying it, but the early signals here are pretty strong. Next on the TipRanks list, we're going to hit IGT, International Game Technologies. This is a stock that's under $20. You've got 5 buys, no holds or sells, and an upside target of $24.80. All right, here's the one-year chart for IGT. And it looks like they've had a pretty good year. They started March 20th at $4, and they've sort of went through the hills and ended up at $19.09. So like everything else in this market, we have to ask ourselves, what's left to run in a stock that's under $20 and has basically jumped up with the market since Halloween? So let's see what we got here. You had a negative EPS of minus 439. Looking off to the earnings column though, it looks like they were squeaking by and now they've had some bigger beats. For me right now, I do need to have a positive EPS at some point in the very near future. That's just the way I'm investing in this volatile time. Looks like this company has not closed their current year of 2020 yet, so they might have earnings on the way. Last year, they did have $1.08 in EPS. I should have mentioned earlier that this company makes two types of products. They make casino games, like technology that goes into slot machines, etc. And they also work with lotteries for things like the scratch-off ticket, automated machines and whatnot. So no surprise that they had a good year last year, but here in 2020, they took a hit. I'm guessing that casinos weren't buying new machines and perhaps neither was the lottery. So they lost, more than $1 per share on EPS in 2020. However, if we look ahead to next year, which is really this year, because it's fiscal 21, they are projected to jump up to 71 cents. So that is very interesting because you have $19 divided by 71 cents, and that gives you a PE of 26. And the only question really for me from there is I just wish I had another year of projections to see where this lands. But this is very intriguing, at least at first glance. We go down to the revenue line. You can see how 2020 is shaping up, minus 35%. They made $4.79 billion in 2019. The estimate this year is going to come up over $1.5 billion short of that. But then it looks like a recovery heading into next year with an 18% growth. This is really an intriguing play. So, I'm going to add IGT to my watch list here and see where it goes. If this thing starts to fall on a red day into, let's just say, $17 or something, maybe even 19's fair enough as it is. I don't know, but I'm definitely intrigued. All right, I'm going to pick off two popular stocks here at the bottom, MELI and Nike. MELI coming in, I can't believe it got a smart score of 10 because it's not 100% profitable right now, but that's okay. You have a strong buy, 13 buys, 3 holds. The top analyst upside for this stock is $2,000, which is plus 28%. And I'll spoil the ending a little bit and say I do kind of disagree with this price target, but let's take a look at it. All right, so here's MercadoLibre. And this stock has been on an epic run. You were up to 1,900 or so on February 16th. They melted down with the rest of the market. There was a time this stock was under $1,400 at $1,369. And I was really intrigued by it, particularly at that price, but I'll show you why I personally didn't invest. EPS at minus 8 cents. That's not the end of the world for a company like this that is growing so fast. But in my estimation, it's just not growing fast enough to catch up to this price anytime soon. If we go to the analysis, you'll see what I mean. Year ago EPS, which was 2020, minus 8 cents. This year they're expected to get profitable at $2, which is phenomenal. That unfortunately works out to be a PE of about 750. And then if they hit this target, an incredible target of $7 in 2022, then you're at the PE of 200, and we're already looking 2 years in advance, right? So MELI's right knocking on the door of profitability. And I personally think if this $2 hits the books, and people start to see where we're really at on the price to earnings ratio, I think it will come down. I think the company's great and it's going to produce a lot of money for a lot of people. But if you're going to buy today at $1,500, just make sure that you're holding till 2025. That's the only way to play this game. It's already run up past the point of comfort level for me on what I would pay for this future earnings of 703. Now, on a revenue standpoint, it's all just, it's incredibly awesome. Year ago, just under $4 billion. This year, knocking on 6 billion. Next year, knocking on 8 billion. 46% and 38% growth. You just can't argue that. That's phenomenal. I just worry that if you bought the stock today at 1,500 and you are banking on it going to 2,000 over the next year, you could hit it. If the market stays hot, you could hit it. But the downside is there if we have any meltdown in the market. Not a big deal if you're going to hold through 2025 plus. I think you'll win ultimately. But just know that I think the short term for MELI, 6 to 8 months, while we see what happens with the pandemic reopening, I think you'll be able to get it for cheaper than this at least 1 or 2 times this year. All right, last one is Nike, currently at 141. You have 25 buys, 2 holds, and a sell in there, surprisingly. And this upside price target, 16% up to 163. All right, and here's Nike today. The 1-year chart, very strong. Back in the pandemic, you were down to, $62. Now you're back to 143. We look at the metrics. You got an EPS of 177. P ratio, call it 80. And you see what happened here. No surprise during the pandemic, particularly the lockdown portion of it, people really did struggle to maybe feel good about buying shoes. But then you saw some life coming out in Q3 and Q4. And I think most of us agree that from a consumer spending standpoint, 2021 should be better. So let's take a look at the EPS and revenue growth to see where is this number going. All right, so the wonderful thing about a stock like Nike is you have 34 analysts tracking this one. So you get a lot of opinions, and that makes the average estimate even stronger. A year ago, EPS, $1.60 is what they ended. I think that chart back there showed $1.70, but either way, very close. Then look at this. You basically got a double up, right? We're still in March, so this 303 could, easily get to 310 or something like that. So strong growth projected for 2021. Then heading into next year at this early phase, they're already looking at another 86 cents. Wouldn't surprise me if this gets to $4. Knowing what we know about Nike. So even on this year, if you take your $3 and roll it into 140, then you've got a PE, under 50 somewhere. And if you do it for $3.89, call it $4, and obviously you start dipping into the 30s for PE. On the revenue side, last year, 37 billion, jumps to 43 and 21. Jumps to 48 and 22, at least that's what's projected. And you got double-digit growth across both of those trends. So for Nike, I would say maybe it's not the cheapest consumer stock in the world, but if you want to talk about the EPS catching up to the price and quickly here in 2021, I would say that's a fair assessment. Maybe look for a dip, but the 160 price target in TipRanks, I think that's achievable. All right, guys, so that's 6 strong buy stocks, at least in terms of Wall Street analyst projections. I've also popped in there and shared my opinion on each one. Hopefully that was helpful. But let me know what you think about the 6 stocks on the board. Are these ones that you're considering for 2021? Or what are some of the favorites that maybe were not covered here? Thanks as always, everybody, for watching. Please give me a like and subscribe. We'll see you on the next video.